This demonstration is designed to instruct you on using MetaStock software and accompanying plugins. It is not a recommendation to buy or sell exchange-traded instruments, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company.
Alright guys, thank you so much for coming today. I really appreciate your time. These last few weeks have been very exciting for me. My wife and I, we've just had our first child, and he's a couple of weeks old now, so I kind of work funny hours because everything I do is in the States, so I work New York hours. So I'm usually going to bed around 1 o'clock my time, which is 7 or 8 your time. So I'll get started on today's presentation. Okay, usual disclaimers. Past performance, as you know, is not indicative of future results, and trading is risky. Thank you guys, thank you. I want to tell you a little bit about us guys. I'm a trader and market analyst, and I provide support and resistance confluence zones that I call the power zones. Along with this, I provide a data sheet with a variety of analysis methods and information for traders. We also provide a pretty edgy, contrarian market analysis for traders as well, which is all pretty unique, and hopefully you guys will enjoy it. The markets we trade, we do some S&P, we provide research for the Dow, the Nasdaq, the Russell. We also do 3 major FX pairs, the Euro, Pound and Yen, and we also look after the crude and gold futures contracts along with the Russell as well. So guys, just before we get started, what do you guys trade? Hopefully some of these instruments are on your list. If you wouldn't mind just typing in some of the instruments that you trade, that'd be great to get us started. FX. Okay, so quite a few Forex guys in there. Diamonds. Okay. Okay, awesome guys. I want to tell you a little bit about why PivotFarm started and how the website got to where it is right now. PivotFarm for me was all about accountability. As you know, trading is quite a lonely profession, and you spend a lot of your time alone in your own thoughts. It started off as a thread on a forum called EliteTrader.com. It was one of the most popular threads on the forum. I think we had over 300,000 plus views before I shut it down. And basically on this thread I would share my thoughts, opinions on the market, and the main thing that I shared was my research and my support and resistance levels that I put together, and they were quite popular. I want to tell you a little bit about my own trading history, and I want to focus on some of my failures as a trader. I had a blowout when I first started trading. This was within a couple of weeks of kind of topping up this account with a few $1,000s that I put together. I think I was around 24, 25 at the time, and I just put some money together that I'd saved up for a while. I knew nothing about trading, and as I'm sure some of you experienced, when you first come into the trading world, it's very overwhelming, and you just don't know what to do. So I kind of just muddled along and just put some ideas together and started trading. I had no trading plan, no preparation, no education, and as you can imagine, I blew out that account very quickly, within 2 weeks actually, which is apparently well below the average trader. So after this first blowout, I thought, I've got to put together, a trading plan and some thoughts, and I spent some time educating myself and did some of the bits and pieces. I had a second blowout after this first one. So not one, but 2 blowouts. And the second time around, I had a plan. I did some preparation. I did have some education. And I did last quite a bit longer. I lasted around 6 months with this account. The account went through various phases. I was doing quite well at the starting, and then through various reasons, like not having great information available to me, because I listen to news squawks and Traders Audio Pit Squawk and some other cool stuff like that. That's really helped my trading, and now I'm pleased to say I've been a successful trader for many years now, and it's what I do for a living. PivotFarm is kind of a sideline that's kind of grown way more than I expected it would. One thing I'll say about us as traders, and I'm sure you guys will agree, we're more than happy to put $10,000 into account, but we find it very painful to spend a few extra bucks on value-adding services, things like news squawks and pit feeds and all this kind of thing, the real information that can give you an edge in your trading. And I think it's very important to view trading as a business, because if you view it as a business, you come to understand that the tools that you use, like your charting package, the news squawks, and all these other pieces of information that you use, they're a business expense, and you should just view them as a tax-deductible expense as part of your trading. And I'm sure many traders don't view it like that, but I think it's very important to invest in good tools. So onto the main crux, a lecture over onto the main crux of what I'm about and what our research is about. PivotFarm is all about support and resistance in a nutshell, and there's a classical definition of support and resistance, which is where supply overtakes demand, this is described as resistance, and where demand overtakes supply, this is support. I like to go a little bit further, and I say that support and resistance are a technical interpretation of price based upon specific methodologies. These methods provide an indication of market dynamics in terms of supply and demand. Where supply overtakes demand, this is described as resistance, and where demand overtakes supply, this is support. The supply and demand dynamic can be interpreted or predicted by methods that can be either proactive or reactive. Now, these are two very important words in my philosophy and in the way that I do things. Reactive support and resistance is information based upon direct price and volume action. So it's what price and volume actually did. It's what actually happened in the market. It's real, core, historical information. On the flip side of that coin, you've got proactive information. This is support and resistance information based upon predictive calculations derived from price. Now, these terms might be quite new to you, so to kind of break them down and help you understand them, these are the two camps. So on the proactive side, you've got things like Fibonacci, calculated pivots, Elliott Wave, moving averages, market profile, trend lines. And on the reactive side of things, you've got volume profile, price swing highs and lows, initial balance, open gaps. And you'll notice the proactive side is things that are calculation derived. They're cyclical based information. They're quite predictive. And just for my information, are there any, if you wouldn't mind writing the methods that you guys have used, are there any Fibonacci guys in here? Volume profile, market profile, feel free to type away and let me know the methods that you're familiar with and what you have used. That'd be great. Okay, so whilst you guys are putting together, whilst you guys are typing that out, so on the reactive side, it's real hardcore, information, what you see in your charts, what price has historically done. And on the left, on the proactive side, it's cyclical, predictive information based upon historical market cycles, and all of this information is derived from historical reactive information. Okay, great stuff. So a lot of uses of trend lines and fibs, market profile, good stuff. Excellent. Just as a quick support and resistance 101. This is basically what support and resistance is. You got a support level here. Price is moving up. Demand is coming into the market, taking us price higher, and the market is finding resistance in this area. Supply is coming in, taking us lower, and we're finding support, and that cycle is continuing in this diagram. So that's just to make sure that everyone's on the same page with what support and resistance is. Okay, the key with what I do and what we do at PivotFarm is technical confluence. This is a very, very important phrase. And what we essentially do is combine multiple support and resistance methods. We're combining reactive and proactive approaches. And we're creating a holistic view of the market using this. We're cross-referencing and comparing lots of different methods and finding high probability reversal areas. And it's all the methods that we kind of talked about in that view of the reactive versus proactive. So how does our method work? What do I do day to day, and how do I put this stuff together? Well, most days my work starts with an analysis of price swing highs and lows. The blue lines that you see are on the chart here. These are from multiple time frames. So I think this chart is a 15-minute chart, but you know, some of these lines may not make sense, and they're probably from higher time frames. So I look at anything from a monthly all the way down to a 5-minute chart. So you've got some blue lines drawn in there that are describing major price swing highs and lows. So we're going to start adding some other methods to this now. I also pay a lot of attention to volume profile. Now, these red lines are areas where there's major peaks and trough in volume profile. So these price points here and here, these are areas where there's either very high volume or very low volume. So these are the lines drawn in red. We'll throw into the mix these yellow lines here, which are calculated pivots. So you've got things like Camarilla, Woodies, you know, quite a few different methods, and you'll see things are getting a little bit spaghettified. There's quite a few lines there now. We also include things like Elliott Wave. Elliott Wave is something that I pay a lot of attention to, and these pink lines here are important Elliott Wave areas. Next into mix, we throw Fibonacci clusters. Now these green lines, I do something fairly unique with Fibonacci, in that I analyze multiple Fibonacci retracements and extensions across multiple time frames. And I compare all of these extensions and look for areas of Fibonacci clustering, so where lots of Fibonacci levels are coming together. And these green lines are describing those major levels. And what you'll notice is quite a few of these methods are already coming together. You've got an area here with some Elliott Wave and price swing lows and highs, you know, same here and here. So there's quite a few methods coming together there. There's quite a few other methods that we look at. We look at trend lines and the open, high, low, and close, gaps, quite a few other bits and pieces, and these are all described on this chart here. And you'll see, you know, some major cluster areas emerging here. Very, very strong areas. Now, what else do we do? I mean, this is pretty great. You know, there's a lot of work that goes into this, and I'm sure many of you thinking that that's good enough to kind of use for your trading and, you know, make some really good progress. Well, one of the main things I spend a lot of time on is analysis of market phases and market statistics. And, you know, overall, the market works in this general pattern. We have an accumulation phase, which leads to a markup phase. We then move to a distribution here at the top, back down to markdown, and back into accumulation. In my research, I found that in certain phases, different types of support and resistance work better than others. So in an accumulation phase, you might find that Fibonacci works exceptionally well. In a markup phase, you might find that volume profile works really, really well. And it's these various phases that, you know, the different types of method work in. And what you'll find is in all of these phases, you'll have bullishness, bearishness, you'll have a trending market, ranging markets, and these are various different market phases, you know, that are subsections of these overall market phases. Now, one thing I'm sure you guys have all have experienced is you've developed a system, you've been testing the system for a couple of months or so, and it's working amazingly well. And then suddenly it just stops working, and you can't figure out why. And a lot of the time, one of the main reasons is the market phase has changed. You know, the personality of the market has changed so much that that system is no longer relevant. It's not adapting, it's not evolving with the market. And that's the key behind the work that I do. I try to make sure my research adapts and evolves with the market. So, for example, in a markup phase, if the volume profile is the most powerful method, and I come across confluence areas where in one area I've got 5 points of confluence, in another area I've got 2, but the area with 2 has volume profile in it and another strong methodology, I might pay more attention to that area based upon that information, based upon the market statistics. I also pay a lot of attention to intermarket correlation. I analyze lots of different markets and the various correlations between them all. So, as you guys know, we're in a global market, and information is just being distributed at light speed. So market correlations are really becoming important, and markets tend to move in tandem with each other. You're constantly seeing correlations being formed and broken and formed. And probably the strongest correlation out there, and one of the main points of reference for the S&P and the Nasdaq and Dow, is their relationships with each other. There's a continuous correlation there of over 85%. So it makes a lot of sense to analyze key reversal areas in those different markets and cross-reference and comparing those levels. Okay, once you've done all that research, put the market phase work together, the various methodologies, what you end up with are these blinding red zones that I call the power zones. And going forward, these are going to be key areas of potential market reversal in the future. Okay, so why do the power zones work? What's so great about the research that we provide, and how can it really help you? Well, one of the main reasons that we've been through is technical confluence. We're combining so many different market analysis forms, different types of technical analysis, that they are confirming and corroborating each other. And because you're also combining lots of different groups of traders, you're combining the volume profile guys and the Fibonacci guys and the market profile guys, and this is increased visibility in the market. These are areas and levels that are very visible to a variety of groups, and thus more likely to be reversal points. Also, there's a lot of people out there that kind of don't believe in technical analysis and this form of analysis. They say that the only reason it really works is because it's a self-fulfilling prophecy. Double tops essentially don't work of themselves. It's because so many people recognize that pattern. That's the reason why it works. Well, I don't know whether that's true or not, but in my research, I don't care, because the most important thing is that we're on the right side of that self-fulfilling prophecy, with all the research and the information that we put together. And the key thing is we evolve and we adapt to market phases. We evolve with the market. It doesn't matter if your system and the way that you pull the trigger doesn't evolve with the market. The zones will, and that creates an edge. We pay a lot of attention to market correlations, and this is a very important part of what we do. Okay, the key crux behind this whole presentation is, are indicators liars? Well, indicators in and of themselves are not liars. They can be a very valuable tool, but traders tend to overuse indicators. There's just too much focus that these stochastics and RSIs and all these kinds of things are giving you some kind of hidden information that you can't get from price. And I personally advocate the less is more approach, and really trimming down your charts and having as little as possible on them to give you that edge. And I believe that supply and demand analysis, or support and resistance, it should be the core preparation for your trading day. It's what you should be investing a lot of time in. In my opinion, indicators, at best, they're an accessory for execution. You've identified a major area and you use an indicator to basically pull the trigger, to help you put the odds even further in your favor. the power zones and the research that we provide, they can be used with indicator-based systems to augment and refine those systems, to help them evolve with the markets. And it's all about things like a lot of people use divergences and crossovers and various types of method to pull the trigger. With using our zones, you obviously have identified key areas, and you can use these methods to help you ascertain whether or not to take that trade. So the zones evolve with market phases, with the market. Okay, I want to show you some examples of the power zones in action, and this is basically just some information about how you can use the zones. Various types of setup. There's 100 different ways that you can use the zones. I'm constantly amazed in all the different ways that our subscribers are using the information, so it's really, really cool. A key point to note before I start showing you the information is the concept of role reversal, and this is a key feature of support and resistance. What was obviously once support becomes resistance, and what was once resistance becomes support, and it's recognizing this kind of nature of support and resistance and the power zones. It's very important to recognize that, and recognizing that setups are very important when using support and resistance. Okay, here are some examples, and this is an example of stochastics divergence. And what you'll notice here, price is coming up to a major power zone, and you are seeing price making higher highs, whereas stochastics is making lower highs. This is leading to a strong divergence, and we're seeing a sell-off there. And another example of that here, we're seeing stochastics making higher lows, while price is making lower lows, divergence again, and we're seeing the market move higher. And also in this example, you'll see the oscillation extremes. So stochastics is kind of hitting this extreme area, crossing over, and then at the same time, price is in a power zone, crossing over and moving higher. So this is just one way to use the zones. There's a variety of other methodologies, and the beauty of our work is that it really can adapt with any system that you use. Here's a simple way to use it: moving average crossovers. And in this example, you're seeing price come up to this area here, seeing a crossover, and it's led to a sell-off. And this band worked here. You got a crossover quite late here, but it's still leading to quite a nice move. You've got a hit of the power zone here, nice little crossover, boom, we're going down again, leading to another crossover of the moving average here in the power zone, taking us higher again. And by no means are these the only ways to use the power zones. There's a million different methods out there. This is an example of RSI divergence. So price is making higher highs here, and you're seeing the RSI diverging, making lower highs, leading to this little sell-off here. You've got major divergence here, so lower highs here on the RSI. Price is making higher highs, leading to a nice strong sell-off. Once we've hit this power zone here, you're seeing some RSI extremes. So the RSI is pretty oversold here, and hit the zone, seeing a nice little bounce here. And again, in this same example here with the RSI in the extreme. The last example that I'm going to be showing you is Bollinger Band extremes, and as you guys know, Bollinger Bands are they use standard deviation, which is the whole bell curve theory, and I think in two standard deviations, 95% of price is contained within the band. So what you're seeing is generally the extremes of price action. So if price is hitting an extreme in the power zones, it offers you a great opportunity to pull the trigger using Bollinger Bands. It's a really great confirmation for Bollinger Band extremes, as you're seeing this. And the beauty is you kind of avoid some of the weaker Bollinger Band extremes because you're focusing your attention on the power zones. We do have a performance section on the site, so by all means have a look through and you'll be able to see how the zones performed and get lots of great information there to follow up with. This is the data sheet that we provide every single day to our traders. It exemplifies and shows all the major information that we cover. I've designed it to be a kind of buffet for traders, so it's lots of great information there, and it's really for you to pick and choose. Most traders tend to focus their energies just on this red strip here, which is the Confluence PowerZones, but you've got lots of great information here, and some of the really cool bits I'm going to run through now. Obviously the main focus of what we do is the PowerZones matrix, and this is it. So you've got the Confluence PowerZones here on the left, and you've got all the major confirming factors or confluence factors for these zones written across this. We haven't got everything detailed due to the limitations of space, but a lot of the information is there. So as you'll see in this 1169 to 1170 area, there's some good confirming factors in Fibonacci and volume profile and lots of bits and pieces there. I'm a really big fan of volume profile. I think it's a very, very powerful tool, and there's a volume profile image within the data sheet, giving you price, giving you volume at price, which you can click on and enlarge. I do something fairly unique with the Commitment of Traders Index, and I've kind of created a setup based upon the relationship between commercial traders and large traders. And the Commitment of Traders report is released by the CFTC every single week. It basically analyzing the relative positioning of different trading groups. So you've got commercial traders, large traders, and small traders. And we pay most of our attention to the commercial and large traders and are looking for a certain relationship between the two. And the setup you're seeing here is a bearish one, because you've got the commercial level is quite low and the large traders level is very high. And this opposite extreme is causing a bearish setup because the commercial group is the lead group of this particular pair. But there's a lot more information about that on the site, and by all means send me an email if you guys want to learn more about that. One of the key focuses of the website is, the information I've provided, intermarket correlations. So this table here basically describes major intermarket correlations, the percentage correlations between lots of different markets. This is on the chart as well. We've also included the indicator map, and this basically describes the biases across 5 different indicators. So you've got the CCI, the MACD, momentum indicator, stochastics, RSI, and it basically gives you a quick glance, a quick view of the bias across those indicators. Okay, we also pay a lot of attention to retail traders and their positioning. This is something I do that's quite contrarian and it's quite unique. I collect information from a variety of brokers. This is mainly on the FX side. So we get all this information from brokers, and they provide the relative positions of most traders. And the setup you're seeing here is from the dollar yen. This presentation's a couple of months old, and at the time the dollar yen was selling off quite badly, and it is still kind of in pretty negative territory from a year ago or so. But in all of that time, almost a year, retail traders have been 75% plus long this pair, and this is a nice contrarian view, and I found it to be very, very useful. Okay, we also include some video analysis in the data sheet, and this is provided by some news service, and it basically runs through the major news events of the day and how those events have affected the market. So what's the value of the research we provide? It's an amazing resource in the sense that we do a lot of technical confluence work. We compare lots of different methods. It's a very evolving and statistically based piece of research, and it's constantly adapting with the market. it can be used to augment or refine almost any trading system. And that's the beauty of the work that we do. There's no specific way, specific method to use it. You can refine it and build it into any system that you're currently running right now. The research, one of the main edges that it provides is psychology. Because we spend such a huge amount of time in putting this work together, giving you that great edge. The evolutionary approach really boosts the confidence of a trader. It provides you with focus and it helps you avoid over trading. And these key factors really help with the trader's psychology. Okay guys, thank you so much for your time today. I want to open up the floor for questions before we start with the questions. So if you want to start typing any questions, I want to let you guys all know about a really great special offer I have at the moment to kind of celebrate the birth of my son. I'm giving everyone 50% off all of our subscriptions. There's a discount code there. It's 9D11A. So by all means, if you're interested in the work that we provide, you can get all of our subscriptions half price. And that also includes a 1 week free trial. If there's any questions, by all means, guys, ask away. And if you want to trial our research, just go to pivotfarm.com/purchase.php, and you'll be able to get a taste of the work that we provide. And sign up. We also provide an indicator that will plot the zones directly on your charts. We've got a MetaStock one that's currently in the early stages of development and should be out pretty soon. We're currently developing an indicator that can be used with MetaStock, and it will basically plot the zones directly on your MetaStock charting software. Right now, you would get the information in a PDF and have to draw it on your chart yourself. I'm hoping to do this over the next few weeks or so. We're working with a developer at the moment. We're in early stages of discussion, but I've got the indicator developed for other platforms, including NinjaTrader and MT4, and looking forward to adding MetaStock to that list as well. Yeah, Bill, there is a performance section on the website. You can run through charts of how well we've done. One thing I will say is I haven't had a chance to update that in a little while because it's just been such a hectic time for me with my wife and her pregnancy and stuff. But I'm looking forward to kind of updating those charts in the next couple of weeks or so. Reynold, the key thing with what we provide is you can use it with whatever system you're using now. And there's lots of different ways to use this, and I'm going to be starting a new section on the website where people are going to be describing their setups and how they kind of put everything together. Jerry, I'm not sure with that question. I think Jeff is probably the best person to ask. Jeff, do we need MetaStock Professional? No. Okay. Any questions about the method? I hope I explained it clearly. If anything didn't make sense, guys, just feel free to ask. I'll be happy to explain more. As you can tell, I've put a huge amount of effort into creating this method. It's taken me many years. It's the foundation of my own personal trading, and it's something I have great belief in. Okay, guys. One thing you might experience when you're signing up is when you enter the code and you go through the process, the price might stay as the original price. I can assure you that's not a problem. It's just a glitch in our payment system, and the payment should go through no problem at all. Hey, Renaud. No, the discount is for today. It's for today. The offer expires today at midnight. I mean, the research is really well priced as it is. This is just kind of like a special I'm doing just for the short time. But by all means, try a month out and give it a shot. But even for 6 months for all 9 markets, for $300, 6 months worth of research, that's less than $1 a day for all that work. So it's very, very helpful. Bill, we don't as yet. I'm planning on creating something that you can buy just for FX, but the all markets package is very reasonably priced. I don't think you'll find anyone else out there providing what we do, the work we do, for the kind of prices that we're providing it for. So by all means, I highly recommend buying the all markets package, because then you'll have access to gold and oil and various other bits and pieces to use alongside your FX work. Right now, Jerry, you can either buy a single market or you can buy the all markets. But with 50% off, guys, it's incredibly cheap. Okay, guys, thank you very much for your time. If there's no other questions, I think, Jeff, we can probably wrap things up. The discount code is 9D11A, and the offer does expire today at midnight. If anyone does have any problems, please do give me a shout. You can email me on contact@pivotfarm.com, and I'm going to put that in the chat. So by all means, drop me a message if you have any more questions and need to learn more about what we do. Okay, guys, thank you very much for your time.